1170. The Answer.
Welcome back. You are listening to Whissel Wednesdays here on AM 1170. The Answer. My name is Kyle Whissel, your host with Whissel Realty.
He made it.
I get to be on the fourth segment. This is very interesting, Jason.
Yeah, nice. Welcome into studio. Welcome to actually saying a few words.
I know I get to talk now, huh?
You get to talk a little bit.
I love it. So what I want to know, Jason, because this is always what I'm most interested in, we got to know about rates. So typically during a normal year, rates are just going to bounce around a little bit here and there. It doesn't make a huge difference. But over the last month or two, rates have kind of been a hot topic. Rates have been going up from Trumpflation, I believe we're calling it.
Yeah, that's what the market's calling it.
So has there been any pullback at all at this point?
No pullback so far. So we keep waiting. Typically when you see stock markets increase, it goes up and then there's a little pullback and then it might go up and there's a pullback. Same thing with rates. If you see rates increase or decrease, there's usually going to be a little pullback either way. And we've seen just a consistent increase of rates, right? Like we might get a day where it's like, oh, it looks like it's going to be a pullback, which just means it's kind of leveling. We're like, yeah. And then it keeps going up the next day, right? And, doing a lot of research, listening to a lot of the experts out there, there's just a lot of optimism that Trump and his group that he's putting together, they really believe, because this is a business guy, that he's going to be business friendly for the markets, for the economy, and for jobs. And that typically means inflation, right? And that's why we're seeing these interest rates increase. We're seeing stock market near 20,000. It's all-time highs. We're seeing one of the greatest increases, and rates are still low. But when we were quoting 3.25 rates maybe a month and a half ago, and it's now 4.25. Well, that's only 1%, which is a large increase, but it's 33% higher than it was a month and a half ago. That's scary, right? That's my concern, because if it keeps going up at that level, we're all going to be in trouble. Now, as I was telling clients yesterday, Kyle, here's the good news. If the economy does continue to pick up, you guys are seeing this, I know Steve and Kyle, real estate values are increasing. Kyle, you told me last night you've got a cash offer on a condo, like $300,000. I can't believe people are making cash offers on condos. That means a lot of the investors are believing, hey, values will continue to increase in San Diego, and they want to buy even if they got to buy in cash.
But that price point is still fairly low. I just did a market report yesterday, and the San Diego average is down 3%. Last month we were at 580, and now we're at 561, 250.
So maybe it's the lower side that we're seeing that increase, because the middle, like you're saying, in the mid fives or in the high fives, low sixes, that's probably slowing down a little bit. But maybe
but inventory is still it's at 2.2 months of inventory,
which is super low.
It's ridiculous.
Well, let me ask you this, Steve and Kyle. I think it's the rental market that's picking up, because the rents are so high.
They are.
People across the world are going, why wouldn't I own a home in San Diego when the rents are going up like this? If you can buy a condo for $250,000, $300,000, and your return on your investment, Kyle, you're getting what, $2,200, $2,300 a month for a place like that, and you only have to lay out $300,000. I mean, and it's only going to go up. That's what it's projected. But again, Clinton was projected to win. If somehow Trump won, everybody said the markets would go into this, crazy thing.
December 19th, we have to wait for the electoral college.
Oh, you're right. Okay, some of my liberals still holding out
December
here.
19th.
All right, December 19th.
See what happens.
We'll see what happens there. But a lot of people projected that the market would crash, and when he started to take the lead and it looked like he was going to win on election night, we all saw an 800-point decrease.
Yes.
Right? That fruition, that prediction was coming true, but it was a very short term, like 12 hours. And by the time the markets opened here in the United States, and the markets were on fire, and they've continued to be on fire.
Yep.
So, I hope that answers your question, Kyle. But as long as you get the right home, you see great appreciation. Are you worried if the rate's 4.5 versus 3.5? Yeah, we wish it was 3.5, but here's good news. They may be 3.5 again in 6 months, Kyle. And, you can always refi. You can't go back 6 months from now and change the price of your house.
Right.
But you can on your mortgage. That's the thing I like.
So, Steve, I got a question for you.
Okay.
So you're the expert today
Alrighty.
on the show. So rates are going up because everybody feels good about Trump, but values are going up because everybody feels good about Trump. I mean, my personal opinion, with Trump in office, a real estate guy who's made billions of dollars from real estate, he's going to do everything he can to bolster the real estate market and keep real estate values going up. So if I'm listening to this show right now, I'm thinking about buying a home and I'm worried that the rates are up, how do I get it in my head that it's okay because values are going up as well. Like how does somebody go through that thought process?
Sure. I think there's two ways to look at it. Number one is, what's your long-term approach? If somebody is looking to buy a house and then unload a house in 2 years, it's not a great investment, period, because of all the costs that are incurred. So number one, what is your long-term approach? And then the second thing is, when you talk to a great lender like Jason's going to break down your monthly payment. And if your payment still fits into where you're comfortable, you've got all the tax incentives in the world, you get all the write-offs in the world. It's just such a big picture versus, okay, I'm just buying a house. There's so much more. And that's why I think people talk to us, especially what we do in the education part of buying a home. It's not you're just buying a home. You're buying an area, you're buying a school district, you're buying an investment and an exit strategy. So I'd really look at what is your exit strategy. And the rates, and Jason, you can attest to this, even in the low 4s, when is it ever like that? Ever?
Yeah, hysterically, it's still super low.
Sure.
It's still super low. I mean, I never thought we'd see below 6% rates. You know, Steve and Kyle and Renee. I mean, for years, we thought, 6.5 used to be the floor in the 90s, in the late 90s, early 2000s. That was the floor. It never went below 6.5. And now you tell somebody it's 4%. Oh my gosh, 4%, Jason? Right. You're robbing me. You gave my brother last month 3.5. And I'm like, well, that's what it was last month.
I use the gold analogy. You could have bought it 200 an ounce how many years ago, and now it's X, and it's just going to continue like that. But do people still buy gold? Of course they do, and they use it, and they hedge against inflation and all of those things. And you can do the same thing with a home. So really, it's understanding what is your strategy, and can you afford the payment, and are you comfortable with this? So that's really how I would talk to them.
All right, again, you're listening to Whissel Wednesdays here on AM 1170, The Answer. If you want to get connected with Steve or any of the guests on the show today, 619-663-SELL, 619-663-7355. And so, Steve, this is the last time you're going to be on the show this year. Mm-hmm. So I need to get your projections and predictions for what's going to happen in the real estate market in San Diego in 2017.
I think we're still going to see a really good increase, because I don't predict that the rates are going to continue to run at this pace. I believe there will be a leveling off or a pullback. So we're still going to be at a level where these rates are still at unreasonably low lows, right? So as long as your payment makes sense, and we did that Keeping Current Matters Tuesday meeting about a month and a half back, where they're still predicting conservatively over the next 4 years.
So what's Steve? You sound like a politician,
run.
Steve.
Well, no.
What's your prediction, Kyle?
No,
Let's hold them to it, man.
I believe that there'll probably be at least a 5% run on values upward this year. So where we're at right now, we can see if the average price point is in the high 5s, maybe another 30,000 on top of value there.
Okay. So if somebody, let's say the average home value is 600, just to make round numbers. Mm-hmm. Jason, somebody can buy a $600,000 house, again, thanks to new loan limits, with 3% down, right?
Yeah.
So you could buy a $600,000 house, $18,000 down. And if you go with Steve Wenner's projection that values will go up 5% this year, that 5% on $600,000 is $30,000.
Yep.
$18,000 investment, $30,000 return. It's more than 2-to-1 return on investment. That's the beauty of owning real estate, is
plus
that you can get right. Oh, I'm getting there. Don't worry.
All right.
I got you,
need
baby.
a place to live.
I got you, baby. So you're looking at 2-to-1 return just on the initial investment, and then on top of that, if it's your primary residence, you're writing off all the interest, you're writing off all the improvements, you're getting all that. Or if you're buying it as an investment, you're writing off 100% of the expenses, and you're getting to depreciate the value of that property. Like, that's just an absolutely beautiful thing. Or you just pay rent and
to a landlord,
give
and
somebody
it goes
else
up every
all
year.
of those perks.
And every year you raise your rents, Kyle, right?
Oh, yeah.
When
We're
is your
getting ready to raise them again.
When has your property manager, Kyle, ever told you to reduce rent?
Never.
Never. And you've been owning property for, 15 years now?
Yeah.
Rental property. I mean, it just doesn't happen in a great market like San Diego. So before we end the show, Renee, what's a tip? We were talking about this in the break, to get a family member, somebody you've been trying to set down, talk about planning their estate, setting up a trust. And some people just don't want to deal with that. What's a tip that you've learned that you can share with us?
It's really a process, especially when you're dealing with elderly people. And I would recommend that they come in and talk to your attorney or, a trusted family attorney that can explain to them the rationale for, the good reasons for setting it up. And it may require a couple of conversations. and with the attorney and with the family member too. Just explaining to them perhaps some scenarios. If you don't do
it, here's what I have to deal with, Mom.
Right.
Here's what I have to do with Dad, brother, sister, whatever it may be, that we then have to decide with the judge on how to do that. Steve, what do you got?
And please understand that this is a good conversation with an attorney versus we think of attorneys and it's usually fighting or litigation. That's not the case. The broad name for an attorney means so much for so many. But in this instance, it's the attorney you do want to talk to.
Right. And I like to say that I really do good work. I like to say that I help people and I like my clients and they like me.
Well, you have a great smile. We appreciate you in studio. We're wrapping up the show. Kyle, any wisdom with any new listings? Anything we've got coming out?
What do we got? We got one coming back in Santee. 3-bed, 2-bath. You got a little view of the San Diego River. Great community. $499, completely remodeled.
Nice. Reach out to Kyle, 619-663-7355. That's the show tonight. You guys, everybody enjoy, stay safe, and get with a family trust attorney as soon as possible. Happy New Year.
You just put your lips together and you come real close. Can you blow my whistle, baby? Whistle.